Hello everyone and welcome to my daily report market analysis videos on Friday 22nd of November with me, Richard Perry, market analyst at Hantec. Well, there's had a slight improvement in risk appetite. We've seen fluctuations in risk sentiment throughout this week surrounding contradictory reports out over the US-China trade dispute. And the latest one has swung sentiment back higher. You've seen the South China Morning Post suggesting that China are inviting Robert Lighthizer and Steve Mnuchin over to Beijing to try and discuss and push the situation forward. So that's taken as a positive. And what we've seen is that risk appetite broadly has picked up on that. You've seen equity markets pulling back higher. S&P 500 futures up 0.3%. That's helped European markets certainly, and hit the dollar slightly. But that dollar hit has sort of mitigated slightly in the last few minutes, as we've seen that the Eurozone PMIs, flash PMIs have come out and they've broadly disappointed. Manufacturing, slight pick up, but look at services, 51.5, way below the estimate, and the drag back on the composite PMI back to 50.3 is a run rate of barely 0.1% on the quarter, so really disappointing through November on that growth number likely, and that's hit the euro. The euro has come back around about 10-15 pips now from when that had been announced. Treasury yields had been higher, they've now sort of tipped back lower, so this positive sentiment we had seen earlier has just dissipated slightly as the markets have just edged back away from risk appetite again. DAX is my chart of the day. I'll sort of talk through the technical implications of the rebound that we've seen early doors today, but very interesting moves we've seen through these Eurozone flash PMIs. We've got the US PMI data, flash PMIs this afternoon, and that will certainly be something to look out for, as expected to show a marginal improvement on last month's across the manufacturing and services. And then we're also looking at the final reading of the Michigan sentiment as well, expected to be confirming the slight uptick from 95.5 last month to 95.7. So a couple of really important indicators for the US this afternoon. So my chart of the day is the DAX. Now what we've seen is, if I zoom in slightly, you can see here the DAX sort of breaking this uptrend, topping over, falling over, breaking through support at 13,140 area, which had been tested on several occasions. We saw that broken on Tuesday, Wednesday, not into the close, although again Thursday, and sort of rebounding into the close around that level. But today we've seen the market picking up. But is this a sustainable pickup? We've seen that rather disappointing flash PMI come out, and the DAX has fallen away quite strongly since that. It's fallen back about 50-60 ticks since that flash PMI has come out. So just rolling over. But you look at these momentum indicators. Look at that MACD bear cross, stochastic sell signal, RSI sort of holding above 60. But if that went below 60 again, that would point towards a more corrective look at the market. So very interesting to see if this rebound that we've seen this morning can hold. 13,140 again becomes sort of supportive, having been supportive throughout much of November. If that is then broken again back to the downside on a disappointment, then we could see this corrective outlook starting to take hold. Market have been very sort of uncertain around the breakdown at the moment, but 13,140, I would continue to take that as a gauge, certainly on a closing basis. Initially, you'd be looking at the reaction low from yesterday at 13,044. However, the fib levels become important. Look at that, 23.6 at 1320, but look at how 38.2% fib at 12,800 was pivotal, and 50% fib at 12,626 is around that old key breakout of 655. So those fib levels of the retracement could well become important if this market starts to drop back below 13,140. So be careful. I'd be on the lookout for that. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.